Good morning, this is Ann Rossley with Baird & Warner coming to you March 26th, 2020. I've had some questions lately about the housing market. What is the future and what we can expect given the current uncertainty in the financial market? So I wanted to share some important information with you now. First of all, interest rates. You probably are aware that for 50 or so years, the interest rates from the lenders has followed the 10-year Treasury yield, but that's changed in the last few weeks. We've seen the rates be a little bit higher than the Treasuries, and that's because I'm told there's been so much refinance going on lately that the capacity for the lenders is stretched, and that's resulted in them offering a little bit higher of a mortgage rate than one would typically expect given the Treasury note. That is expected to level out very quickly, and we're told that interest rates are going to continue back down again since money is so cheap, and you should pay attention to the rates, stay in touch with your lender, and we will probably see record low interest rates in the coming weeks. So then the next question, what I'm hearing a lot is, what's going on with the housing market? Based on our experiences of 2008, are we going to see another sharp decline in home values? And so I wanted to put this in perspective. First of all, everybody remembers when the decline occurred in 2007, 8, and 9, our home values declined. But the previous recession, the 2000 to 2002 dot-com and 9/11 stock market correction, saw a very different picture in home values. Appreciation to the tune of 6.6 to 8.6% for those 3 years. Not at all like the stock market correction. So the point to take away here is recession does not equal housing crisis. In fact, in the last 5 recessions, 3 of those had good home value appreciation numbers, and just the 2 had issues with home values. Wells Fargo Investment Institute says that the reason for this is the problem we're seeing now with COVID-19 and gas prices is outside of the financial markets. 2008, it was a financial crisis. Because of these outside factors, once those level out and go away, we should then be able to go back to the way things were. Goldman Sachs says that, yes, we are in a recession. GDP's ground to a halt. Things are a little bit slow right now, but we're going to see things improve in Q3 and Q4 and even into 2021. So that leaves the final question. What's going on with foreclosures? Are we going to see people who are not making money like they were going to go into foreclosure, and will that spur a crisis? And you probably have heard Fannie Mae is holding off on foreclosures. They're not proceeding with the foreclosure process right now. Illinois has said that they will not evict anyone during this time. And so that will help us weather the storm. But there are 2 more important pieces of information that I want to share. Number one, everybody in 2007, 8, and 9, they were acting like their homes were a bank where they were taking out money and refinances to pay for other things that were going on, not necessarily even home improvement loans. So during 2005, 6, 7, over $800 billion was taken out. That's not been the case for 2017 through 19. We've seen some refinances as values have increased, but it's only been about a quarter as much, $232 billion, as what was taken out during the 2005-7 cycle. Furthermore, historically, people pay about 21% of their income toward their housing payment, and guess what? We're paying even less of that right now. Now, whether it's because people are more conservative or because they've refinanced and have low interest rate mortgages, the fact remains people are only paying less than 15% of their income toward their housing. So that means people have more equity in their homes and people are spending less on their monthly payments. So we're in a much stronger situation nationally for each homeowner in terms of weathering this short-term financial situation. You know, there's so much more I'd like to say. I am thinking about all of my clients, our friends, the community. Tom and I are very concerned about everyone out there. And if there's anything we can do, please reach out to us and let us know. I'm not soliciting new business to go out and look right away. I think it's important to stay home, take care of our loved ones. There are a few personal situations where it makes sense to do some real estate moves right now. If you have one of those situations, please reach out to me. It's a good time to start thinking about a future move. If you're thinking about making a move in 2021 or later this year, please reach out and let's talk about developing a game plan for you. As I said, take care, stay safe, and I look forward to seeing you when all this is over with.